Yo, what's up? Hope everyone's having a good day, and hope everyone had a profitable trading week. It's currently 12:57 p.m. Friday, July 8th. This doesn't really matter, but I just like to, show you guys what time it is. And it is NFP, so I didn't trade today, but we ended off the week really well, nonetheless. So this week's video is actually not going to be a trade breakdown. I'm just gonna cover the concept of order blocks, just because I have people DMing me asking for more information about them, so I figured that this week's video could just cover order blocks. Now don't worry, there are other concepts like breaker blocks, fair value gaps, imbalances, accumulation blocks, mitigation blocks, vacuum blocks, propulsion blocks. There are a lot more concepts out there, so if you guys want like any more information, then just let me know. But I figured order blocks, they're actually the most asked video, so I'm going to go ahead and cover that here. Now we have my teaching chart open, and you're not needed. Before we actually go right into this, let me make some drawings on TradingView to explain this very simple concept. Right, let's assume that there's a range, and many of us have heard of this before, right? People call this AMD, accumulation, manipulation, and distribution. So accumulation, and we'll call this the manipulation, and then let's potentially call this the distribution. Let's just call it an expansion of price. So general idea, and I'm going to try to keep this video maybe under 20 minutes. I want to go to the gym and sit in the sauna for like 30 minutes. So accumulation, assume that price is just in a range. What is this doing, right? Price is engineering liquidity on either side of the market. Now obviously what a lot of people tend to do is sell up here and then buy down here, right? Eventually you're going to notice that price gets manipulated in a certain direction, and then price proceeds to go all the way up, comes back down, and then goes in the intended direction. Now why does this happen, right? We have to understand that for lack of a better emote, let's just put the money sign over here, the dollar sign. Let's assume there's liquidity on either side of the range, right? We understand that there will be buy stops above here, more than likely, right? Buy stops, and we also understand that there will be stop losses. Right? How do I know that there are stop losses? Because I've traded this way before, and there's nothing wrong with trading any certain way. At the end of the day, you're still making money. But I just wanted to go ahead and explain this concept of liquidity and how all of this plays in with order blocks. So there are stop losses up here, right? And what we'll notice is that you'll also have a lot of stop losses down here, but instead of buy stops, you will now have sell stops. Okay, this looks very ugly, but let's let me go ahead and cover why this is pertinent. So we have buy stops and we have stop losses. Why do we have stop losses? If someone is shorting up here, chances are they're gonna have their stop loss just slightly above the range, and more than likely, and I know this from experience as well, if you're gonna buy at the support level, you'll have your stop loss right down here. So we understand that liquidity is engineered at either side of the market, and now price is gonna have a leg down because people are not expecting this level to be broken. They're expecting price to stay in the range. Now when price does this, institutions are actually involved. They're manipulating price to the downside to grab all of this liquidity. Now imagine you have your stop loss down here. It's going to go ahead, get your stop loss, right, and use that as liquidity to expand the market to the upside. Why does this matter, right? After this happens, you have to understand that institutions are selling. They had to sell to manipulate price. They had to move price all the way down here. Now, after they do that, they're going to leave an order block, also known as an institutional order block. This is just another form of supply and demand. They're both the same concept. I just like to think that order blocks are more precise levels, right? So in this case, you'll notice that the institutions are actually going to sell before they buy. This is why a bullish order block is just called a sell before you buy candle. So what would that look like? It would look something like this. and let's just make you white. Now this order block will be over here. Now what did we just achieve by price coming all the way down here? What happened is that the institutions can go ahead and actually mitigate their sell order that they had over here and go ahead and let their buy orders free, and hence the very aggressive expansion we have in price to the upside. Because once there are no more sell orders, and what a lot of people also fail to understand is that there are a lot of hedgers in the market, large institutions that have a lot of capital to work with. They don't mind taking a sell to manipulate you out of your position and then proceed to go in the intended direction. That's not that much of a big deal. They have a higher risk tolerance than, you know, a lot of people. So the intended direction was to the upside. They cleared liquidity, right? Went up here, cleared more liquidity potentially, then went down, grabbed liquidity from this order block, and then stacked up on their buy orders, and then facilitated the movement to the upside. Now conversely, you can have this to the downside, right? Except obviously ignore this. Let's just call this buy stops and stop losses instead of sell stops, and vice versa. Now we had an accumulation in price, a manipulation, and then a distribution. Now price manipulated these highs over here, and you can get into concepts like Wyckoff. You can notice that there was probably a distribution schematic in here. You may have noticed that there was a redistribution schematic in there as well. Now price got manipulated, broke these lows, cleared the liquidity, then proceeded to go to the upside, grab the order block, and then go back down. This is the basic idea of order blocks. We're gonna flip this, and see, let me leave it here for a second if anyone wants to take a picture of this horrible NFT artwork. Okay, wonderful. Now, can I show you guys this in practice? Of course. And if you watch my past videos, you understand that, you know, I use these concepts like in the live market. These are just examples. If you want to see how they're done in the live market, I show myself live trading, just so you guys understand that these are not just cherry picked scenarios. All these scenarios actually played out, and I was actually involved in many of them. I don't think the ones back here, when was this? May? No, I don't. I think I was in Miami around this time, so I wasn't involved. I think I was down here. One of these you're actually going to notice is my YouTube trade breakdown video on AUD/USD. I was actually in this trade earlier. It is Friday, but I was in here. I was floating good R, then I got actually hit at break even. I think I was up 3 times my risk on this trade, 2.91. So notice how on AUD/USD we overall have a bearish tendency, right? We're expecting price to go down, so naturally you'd be looking for the last buy candle before you sell. And let me give you guys one last example, okay, just to make sure we're all on the same page. So let's assume price is moving in an uptrend. This here, I'm going to pause the video and quickly draw this out. Okay, I'm back. So what I went ahead and did was just create the Mona Lisa of trading, pretty much. It looks very good over here. So let's assume that price is going up, and I actually have a few examples hidden within this nice little thing over here. So we have a bullish premonition from the market, right? We know that the market is underlying bullish, for example, and we expect price to keep going higher. Now notice how price went up, right? And for the sake of example, let's just say that there was a high over here that price just broke. So let's assume that price just broke above a high, right? So we just created a new higher high. We have our swing low over here. Now notice how price broke the high and left a lot of inefficiency. Now once again, I don't mind making a video covering the rest of these concepts, but just to keep this short, I'm just going to go ahead and cover order blocks. I'm going to cover a little bit of imbalances, breaker blocks, but all of those things can get their own videos, and we can even make an order block video part 2. So this would be the order block / demand level. Now we're calling it an order block because it's just one candle and it's a more precise form. Now demand levels are typically drawn with the wick, depending on who you learn them from, but typically from my experience, demand levels are drawn with the wick. So we just broke above a high. We understand that we have a lot of imbalance in this area here, right? Oh god, this video might end up being a lot longer than I thought. Let me go ahead and cover imbalances really quickly. So this is an imbalance. Assume that you have 3 candles and there will be a gap between the first candle's wick and the third candle's wick. This makes what we call an imbalance. This is also a fair value gap. It's just an institutional imbalance. This is a form of inefficiency in price that a lot of the time the market comes back to fill. So notice how there's a gap here, and likewise on the downside you'll notice that there will be a gap between the first candle and the third candle's wicks. We'll leave that there. So we understand that there is an order block over here, and there was just a manipulation of the highs, and that we have imbalance back to back. And I can actually show you guys this. Look at this. There's more imbalance up here, all this imbalance here. And if you studied a lot of the ICT concepts, then you understand that this whole thing here is just called a liquidity void, which is just, you know, another form of inefficiency. But now notice how price came into the order block over here and proceeded to reject off of it. Why did price come back? Well, there was a propulsion block, which is an order block that formed off of an order block. So we understand here that price actually came back to this order block. Now, why did it reject off of this specific level? Well, you notice that there's also a bearish order block over here. So now you see what price just did here. We ended up clearing the inefficiency on this side of the market. We grabbed liquidity from this order block, used it as fuel to come all the way down and mitigate this new order block as well, and then proceed to go to the upside. Now you can ask, Omar, why did price not reject this order block over here? Well, it's used as something called an ICT breaker block, which is just simply put a disrespected order block. Notice how there's an order block here. Look at that imbalance level. We understand there's inefficiency in it. How come price just blasted right through it? And I believe I showed this concept in my NAS trade as well. So sorry, when price disrespects an order block, there's still liquidity in it. What's going to happen is most likely price is going to use it to go in the other direction. So now we can copy this, and we understand that although this order block here was not respected, price broke through it, it actually came back and respected it again, just in the opposing direction. That's why when people draw structure, you can optimally see something like this. Now, depending on the way you trade, you can just call this resistance turn support, all of that. In this concept, we're just using these as breaker blocks, which are just disrespected order blocks. But let's go back to just order blocks specifically. So notice how I said that it respected this bearish order block over here, went down. I'm not expecting the short price from here. This is just to, you know, tie everything together and explain the dynamic concept of order blocks over here. So it's not like if price were to come up here, we'd be looking to short down to the propulsion block. We understand that the overall tendency of the market is bullish, so, you know, we'd like to stick to that overall bullish momentum. Now you also notice that there's an order block down here that was not mitigated. Now this is going to be a potential area that price could come back to. Now if you get into ideas like complex pullbacks, so on and so forth, then you'd notice that that's how this would work. Now let me see if we can invert the chart. Oh wow, that looks a lot better than I thought it would. Nice. Okay, so now to the downside, let's assume that price just broke a low over here, right? This line here indicates that we broke below a low. Price goes down, starts going up, but now instead of using the sell before you buy candle, you'd be using the buy before you sell candle. So the candlestick colors are going to be a bit off. I can actually show you guys the live examples of this in price, but let me invert or revert the scale, and I'm going to leave this up here if anyone wants to take a picture of it. Actually, I'm gonna name everything here, and I'm gonna actually put the trader view screenshot in the description if this is gonna help anyone. OB, we're just gonna call you BB for a breaker block. Wonderful. Okay, save that picture and just drop it over here so we can reference it. You'll find this picture in the description of the video. But anyway, now that we covered that, I'm going to go ahead and actually go to live chart. So this was a trade I was involved in. Notice how we're on the 1 hour time frame, and just like I mentioned before, notice how price broke a low. This was the line that I depicted in the drawing. Price broke the low, and we had a break structure. Now we also understand that there was also some sort of an internal break of structure in this level over here. After price did that, there's one candle here that stands out. They bought their positions before they sold off, understanding that there's still liquidity up here that needs to be grabbed. What else tells me that this is a good order block? Look at all this imbalance over here. There's a whole ton of it over here. IMB just means imbalance. So notice how there's a gap between the first candle and the third candle. So we understand that there's a high possibility that price is going to come all the way back up here. Now this happened. The optimal trade was over here. I think, yeah, 4th of July. Obviously wasn't trading then. Then what happened is that price started breaking down, and we waited. We waited from the 5th to the 7th, so we waited like 2-3 days just to see if price can make its way all the way up here. And price made its way all the way up, barely hit the order block ever so slightly, and proceeded to drop down by 70 pips total. Now this is not trade breakdown video, so I'm not going to go into specifics on that, but notice how over here price also broke above a high. We had a point of interest down here, and we had a bullish order block. Now once again, notice how there's imbalance over here. Price came down, cleared the imbalance over here, but we still left the order block, hence why price came, cleared this order block out, and then proceeded to use it as fuel to move price to the upside. Now let's move to the left a little bit. Same concept here. Bearish break of structure, and another bearish break of structure over here. This is more just an internal break of structure, but we still keep all of that stuff in mind. So now notice how once again there's imbalance right here. I don't normally draw these in my video, but just for the sake of the examples, more imbalance over here. Okay, now we understand this is a nice little order block over here, and keep in mind all of this is, I'm doing all of this on the 1 hour time frame. Now the fractality of the market allows you to do this on any time frame. At the end of the video I'm going to show you guys a 1 minute time frame example. But notice how an order block was formed here. We have all of this imbalance. Price came up, cleared the first imbalance over here, then rejected off of it, but we still understand there's still this underlying imbalance and this order block all the way up here. So what did price do? Price formed relatively equal highs over here, and a lot of these concepts we could just get into on other videos just to avoid the video being too long. Relatively equal highs over here. Then what happened? Price manipulated these highs. We bought up to manipulate these highs, grab whatever orders we have up here, and then use the order block by mitigating it as fuel to the downside. So this is where, we don't just take a trade off of just, there's an order block up there. No, we actually wait for confirmations. If you need reference, just check my past trade breakdown videos. You notice that yes, price hits the order block, but I wait for confirmations. So we don't just mark up there it is. We don't just mark up every single order block that we see. We don't do this. Every level of price has a relevance. So once it hits one of our levels, then we break it down and then actually look for the confirmation, so on and so forth. But that's a perfect example right over here. Notice how in the meantime we're actually having breaks to the upside. Now if you want to get really technical, boom, perfect order block, imbalance over here. Price came up, mitigated most of the imbalance, still left a little bit, came up, grabbed the liquidity from the order block, went down. What else do we notice? There was an order block here as well. Price fell short, but that's fine, right? We're overall looking to take the market down. If you look to the left, price still came to the order block, and you can definitely see some accumulation go on in there, but price definitely came to the order block. What happened now? We swept the high, price left another order block over here. Perfect rejection, went to the 50% of the order block, rejected off of it, used it as fuel to go to the upside. Same thing here. There was this order block here that was rejected, and instead used as a breaker block over here. It was disrespected, price came back, retested it, and then went to the downside. Do we have any bullish examples? Yes, so this is my 1 to 11 trade breakdown on my channel from AU. Now this was all done live, but notice how price actually broke above this high here. We had a bullish breaker structure, and we left this order block here. This is one of the cleanest looking order blocks that you'll find. Now notice how, oh, even perfect. I didn't mention this in my video, but perfect. Notice how there was liquidity to the downside, and they actually sold into their positions, right? Then price went to the upside, then we came back to mitigate those sells, and then let the buy positions play out. Now this is a sell before you buy candle. So when price comes down here, they can actually offload all of their sell orders, because they're not looking to sell at this level here. They were just looking to manipulate all the stop losses, the sell stops, all of this. Notice how these lows, liquidity was grabbed from them. The candle didn't close below it. So we had an imbalance over here. Nice little imbalance. And we waited. Now this is where patience is a big thing. We noticed that the order block here formed, and it took me 4 days and 22 hours for the order block to get hit. You know, it's not a big deal. This is all just patience. So price came down here. We waited. We had some sort of Wyckoff confirmation on the lower time frame, and we took it all the way up here. So I think I got 75 pips off of this move here. But notice what happened, right? Price formed this order block and actually swept this high over here and formed an order block within an order block, making this a propulsion block. Now price barely rejected off of this, then proceeded to go down, but the concept remains the same. Same thing over here. Notice how the order block was slightly traded through, and then price went up and then proceeded to go back down. I believe that's everything. Or one more example, price broke the high over here, had an order block here, went ahead and rejected 50% of it, went formed relatively equal highs over here, left a propulsion block right over here, price came back, traded through it, and then went. Now for the sake of completion, I'm gonna check on what happened to this order block here. Perfect. So this order block was rejected off a little bit, but if you want to turn it into a breaker block, you can. Traded right through it, came back, and then you got the rejection off of it. There's more. So notice how I mentioned that this order block here, just for completion's sake, wanted to go through and see what happened to it, and we actually noticed that we had ever so slightly a reaction off of it. What did this reaction accomplish? Well, order block, right? So that reaction in that case just served as liquidity. Notice how we use that as an excuse to go up, mitigate some orders, and then look to keep going short, because keep in mind the overall direction is bearish. That's what we're expecting. We're not really expecting the bullish order blocks to hold. We want the bullish order blocks to fail. We're looking to short. There are going to be instances where the bullish order blocks hold, but overall, looking at it from a higher time frame, we understand that we're primarily selling. So we use that order block there as an excuse to go bullish a little bit, mitigate orders in here, and then keep going down. Notice how we also mitigated this order block here, used this one here as a breaker block, rejected it, came back and retested it. Same concept over here, and back to the video. So wonderful, wonderful, wonderful. I can go ahead and, oh my god, 22 minutes. Okay, we gotta hurry up. I can go ahead and show you guys the example on USD JPY. Yeah, this is on my main chart though. So on UJ, notice how from a 2-hour perspective, we had this nice little order block. There's also imbalance over here. We noticed that price actually rallied above these highs here. Didn't quite make it up here, but we had the order block over here. Price went down, mitigated this order block, used it as fuel to the upside, and then I went to the 1-hour time frame, and we noticed that we broke above these highs here, validating this order block. Now look at all of the imbalance that was formed on this order block when it was first confirmed. First candle wick all the way to the third candle. This is all inefficiency that the market oftentimes comes back to fill. So understanding that, price actually came all the way down here. Today's Friday. I don't trade Fridays, but nonetheless we're still looking at it. We had our Wyckoff confirmation, and this is what I mean by we don't just, you know, put an order block on the screen and say if price hits it, I'm gonna margin out my whole account. We had our Wyckoff confirmation over here, 2-minute order block right over here. Notice the imbalance. Notice the imbalance right over here. 2-minute order block, then this would have been the optimal entry after breaking above the after breaking above the highs over here. If you missed that entry, then there was a re-entry opportunity somewhere over here, but you know it's Friday. We don't often trade Fridays, but we're also going to keep this in mind. Now, many people may ask in the comments or text me personally, why did I not draw this order block out? Well, notice how we formed a high here, liquidated the high, so now we agreed that the new leg of price would be this right over here. Now, that's not to say price can't come down here, but we're more focused on relevant price. Wonderful. Now, examples going into next week. I can't really show you guys my chart, and at any rate, none of this is financial advice. I legally have to say that. But I'm looking at UCAD, right? Looking at UCAD, notice how price has been trying to move more to the upside. We're breaking above these highs over here. Didn't quite make it above this high, but we have relatively equal highs over here. So let's use this level here. EQH just for relatively equal highs, and change the visibility time frame. Now we have equal highs over here, so what am I expecting on UCAD? Once again, none of this is financial advice, and this is all just a probabilities game. If you look to the left, you notice that price broke this high, and just like the example I gave you guys, I'll put that in the description of the video. Price came into the order block, rejected off of it, and then moved to the upside. Now it also left behind a propulsion block, which is another order block right over here. So it's not to say that price will just hit this order block here and fly to the sky, but that's also a possibility. That's why we have multiple areas that we look at. But talking in terms of the most relevant part of price would be looking over here. Now, once again, it's all probabilities based. There's nothing to say that price will come down here, hit this order block, and then, I don't know, fly to the moon. But we understand that it is a possibility. That's why I have my alert set here. We can very much see that price can manipulate, come down here, grab the liquidity, clear out the equal highs over here, grab whatever buy stops or stop losses are up there, and then maybe come down to fill this inefficiency. Or price could say, I don't want to do that, and just straight go down and then proceed to go up. Now obviously that's not how the market actually moves. You'd see something like this, entry over here, that looks very terrible, entry over here, and then price goes to the upside. Wonderful. Now this zone here does have a lot of weight. If you look at what we talked about, back to back to back to back to back imbalances, it was rebalanced over here, but we have more incentive to go to the downside. But overall, it's not out of the question, especially with the way the dollar is, to expect UCAD to go up a little bit higher, to potentially even clear the liquidity that lies above 1.38788. Nice, actually very nice weekly order block over here. Now all of this I'll be keeping in mind, but this is just to show you guys a live example at price. A lot of my trade breakdown videos are actually live, so if you go to my channel you can see all of those as well. But that's the concept. Order block here, propulsion block here, potential propulsion block here. Now we can see this happen. See the DXY. Yeah, the DXY hit one of my levels all the way over here at 1.07619. Okay, we'll see how the week goes. Now, to quickly summarize this, I don't just choose any order block. You know, a lot of this you guys will notice comes down to preference, but the way I do it and the way a lot of people actually do it is we like to see incentive within the order block. We like to see imbalance or any form of inefficiency within the order block. I don't just choose, you know, a random candle as an order block, because technically this here is an order block, right? But I like to see that imbalance in here. You see it's still played out, but it wouldn't be what I consider a quote-unquote high probability order block. So this could be a very painful process for many. I'm not sure how fast I can type, but what makes to some sort of area normally causes Okay, so what makes an order block valid, right? We normally have some sort of inefficiency within it that validates the facilitation of price to said area. The order block normally causes a breaker structure / is followed by a breaker structure. What else makes it relevant? We have price or finally, and then price. Price engineered liquidity. Booyah. So I hope everything I said made sense. If you have any questions, this is the end of the video, so please reach out to me on Instagram, the comments, or yeah, this is my Instagram page over here, this is my business page, and this is my KOD page over here. And that's everything. Peace out. Have a good week, guys. I forgot to mention, I did not create any of these concepts over here. This is, you know, where the concepts are from. ICT, Michael J. Huddleston, you know, learned a lot from him. As with a lot of other people, but the ICT order block is actually coined by him over here, just to make sure that I'm giving credit where credit is due. Anyway, peace out. Hope everyone has a good week, and be on the lookout for a new video.